Okay, 11th of January, Rudy here. Welcome to a special episode of the battle of our ASX share-based listed ETFs, the VAS versus the VHY versus the MVR. And hopefully you've never heard of MVR because that's the objective. But let's start with the VAS, the popular VAS. ASX 300. So this is the fund fact sheet for VAS. So yeah, we're looking at VAS. So the key points to note. So the underlying shares got a dividend yield of 3.14. Blah blah blah. And the financials make up just over 30%, and materials 20%. Okay, then we have the second popular, VHY, which is our high dividend ETF. So let's just have a look, make sure we're looking at the right one, really. So VHY. Okay, so the key takeaway here, so yes, the underlying companies are paying a higher dividend there, 4.2, and there's a bit of blah. But so the big difference here is, so financials are making up nearly 40 and materials are still 20. Okay, so we've got a 4.3 div versus a 3.1, so an extra 1% div. Okay. Now the interesting thing to note on the VHY is it's not completed yet, but what we call a head and shoulders, shoulder, head, shoulder rounded, which is actually a bearish chart pattern. Now what I like to do is ratios. So what we got here is the chart of VHY over the chart of VAS. So there you can see, so there is market, like back in 2012, VHY outperformed VAS by 22%. And then similarly from this period here, 2014 to 2020, the opposite happened and VAS outperformed VHY by 20%. And now we've been in this period of VHY outperforming, so since 21 to date, 18%. Now if this was just a chart by itself, we have things called measured moves. So this range here, add it to the breakout, gives you a target, like an expected target price, and these are forming topping pattern candles. So what this ratio implies is that VAS is going to start an outperformance of VHY. Now that doesn't mean that VAS is going to go up. It just means that VAS, for example, if both of them go down, VAS won't go down as fast. Or if one goes sideways, the other one might go up a bit more. So I'm not implying that this means VAS is going to go up 20%. And why is that? Because so we know VHY has a higher weighting to the banks. So the XFJ, this index here. So you can see there's a bit of a that VHY topping pattern is largely due to this financial sector index. And if we have a look under the bonnet, so CBA obviously is the big one. Now CBA is on I cannot see that bouncing from here. So we take this move here and we add it to that move there. So that takes us down to almost, well, basically bang on the bottom here, which doesn't mean it's going to bounce. Now, one more thing, well, why would the banks fall over? So ANZ, again, a bit of a topping pattern there. It's made its measured move. So the distance of the cup to there, I guess there's two things. One is, well, there's lots of theories. You just follow price action because it's all baked in. But one is, how much more debt can the average punter get in to buy a home? And yes, everyone's trying to maximise try and make pay slips or whatever look good to get a home loan. But all that's baked into the price. And immigration, if there actually is a halt on immigration, because that definitely has an impact on housing prices. I mean, you bring 2 million people into the country, they all got to live somewhere. But so that's some fundamental reasons for you to think about. But I like to follow price action because then you don't get swayed by stories. Westpac. So again, Westpac's made a targeted move. So it doesn't look as bad as Commonwealth Bank. NAB. So there's no real targeted move on NAB, just the fact that he's got some topping candles there and he's sitting on a pretty key support level. And then we finish off with Macquarie Group. He's got a real long-term topping pattern here and forming an inclining wedge, which if you follow the channel, that's a bearish pattern once it's broken. So I think that's why. So VHY, given it's more bank dominated and VAS is less bank dominated, would be a reason, if you're going to pick one of the two, to pick VAS, because even though VHY pays an extra 1% div, you might just lose that on the capital. Okay, so that's VAS versus VHY. All right, and then the other corner. Obviously, if you follow the channel, you know this is the MVR ETF, and I'm hoping you don't know much about it. So MVR basically is just the mining shares sector of the ASX. So 2.8% dividend yield. So it's not crash hot, and who's in it? So the top weightings: BHP, Fortescue, Rio, Woodside, Northern Star. Okay, so you can see there's no topping pattern on MVR. If we look at some of the holdings, so we've got BHP breaking out to all-time highs, led by the price of copper. We've got Fortescue heading up. It's led by the iron ore price, which is breaking out. We've got Woodside, who's forming a bottoming pattern along with the oil price. The oil price, it'll be an interesting week this week for the oil price. For those, it's a indecision week candle where it's gone up and down and finished in the middle. So a break is bullish and a break there is bearish. But I think that we can't predict, but the tendency is for up. And then we've got Northern Star, who's gold miner, and that's the gold price. So if we go and do the old ratios again, So this is VHY over MVR. So similarly, so MVR was outperforming, then VHY, and now we're entering a period of MVR outperforming. Same with VAS. You got MVR outperforming VAS. Now, if we take a longer, because this chart cuts out at 2014, I like to use this one. So this is the VAS XKO over the MVR, with XMJ is the materials index. You can see back in the 2000s, the materials index outperformed by 60%. Then the VAS took over, then the MVR took over, and we're now entering a period of MVR outperforming VAS and VHY. So the objective of the video was just to, if you want to make a choice between VAS and VHY, then that's the info. Or if you want to make you think about whether you want to tilt have some VAS or VHY, and if you want some growth, go into what we call the tank. All right, that's it. Let us know your thoughts. This is just my personal opinion, not financial advice. If you appreciate the video, please hit the like button. Me and the rooster appreciate it. All right then, thanks. See ya.